Hello, everybody, and welcome in to Commodity Culture, where our goal is to make you a better investor in the commodities sector. My name is Jesse Day, and before we dive in, standard disclaimer, nothing here is investment advice. Do your own due diligence. And today's guest is the CEO of Auriginal Metals, a Quebec-focused copper and gold company with one of the province's largest and most diversified exploration portfolios. It's Peter Cashin. Great to have you on the show.
Good morning, Jesse.
Good morning to you as well. Good evening here in Serbia. I want to kick things off with the gold space in general. I want to talk about copper with you as well. And then I want to dive into the details on Original Metals. But what a year it's been for gold so far, hitting new all-time highs of around 4,300 before a correction. And now we're rising again above 4,100 as of the time of this recording. What are the catalysts driving the gold market at present in your view, and how far do you think this gold bull cycle has to go?
Several factors I think are affecting gold. Obviously, the increased buying by central banks, most notably China. I think political and economic uncertainty is a big driver on gold. I've always known gold to be a hedge in inflation. I think there's still some inflationary fears that are in the market currently. And then I think the last measure is people want to diversify their investment portfolio, and they're including gold within it. You ask an interesting question. Ultimately, every time I hear somebody make a prediction on price, I get first it's a little bit of denial, and then all of a sudden we achieve that level, and now we're at going on 5,000, and people are talking about 15 or even $30,000 gold, which is astronomical. It's really tough to predict. I mean, ultimately, given that gold is such an important indicator of the financial markets, it really depends on what happens globally in terms of the geopolitical environment that we're currently experiencing. I think if you can overcome that, gold is likely to either just settle or maybe come down a bit, achieve a new normal, which probably around $40 or $4,500 per ounce gold, and then we'll see at the next leg up. Undervalued, from my perspective, I've been in the exploration sector now for quite a number of years, and experiencing $250 and $300 an ounce gold. So 4,500 certainly is an interesting point to be at that I didn't think was ever attainable. And I always told myself that if we attain those levels, I think the economies are in big trouble.
Yeah, that's a good point. And when it comes to the mining sector, do you think there's a long ways to go there as well? Because for a few years, as gold was rising, the miners were not really providing that levered play on the gold price. However, that seemed to all change this year. We saw a massive rise in the GDX ETF, just to give one example. And at the current gold price, we can see that a lot of these companies, particularly the big producers, are essentially printing cash. What are your thoughts on the gold mining sector at present?
We've just come through a long, very protracted bear market for resources in general. For the most part, major mining companies have always been reliant on the junior space to accept risk and undertake risks through exploration, and then later acquired. And I think the IM Gold acquisition of a couple of companies recently is a good indication that now I think money is coming back and going down upstream again into the junior space, which is good to see. But I think we're a long ways off. I think that about a 10-year bear gap has caused a significant shortfall on the availability of gold resources, and we're kind of playing catch up right now. You're seeing a lot of gold exploration happening. I'm always concerned about the kinds of portrayals of what's considered an economic gold assay from a lot of juniors. Ultimately, it's good to have a great, high commodity price, but everything else goes up. your material costs are up, labor costs go up, and construction costs go up. So really, your margins are no better, even with a higher price. So you still, from my perspective, I think junior miners still have to, maintain a higher level of what's considered to be an acceptable gold grade for a good project.
And it's been a fantastic year for copper as well, hitting new all-time highs of nearly $6 before correcting. We're at around $5 a pound right now. It feels like there's so many tailwinds behind the sector. What are you watching right now when it comes to the copper market that you think investors should be focused on?
My background is I was about 15 years before coming into Original into the critical mineral space. So I've been tracking that, and the electrification of the automotive industry, the aerospace and defense industries are showing to be big consumers. A little bit less so in the United States, but Europe is under significant pressure from restrictions on hydrocarbon sources from Russia for heating and power. So they have no alternative but to seek green energy solutions, certainly for power generation for those jurisdictions. So I think that's a huge consumer. Just in general, defense is a huge consumer of copper, for wiring and other applications. Power, these AI stations, power stations. They're requiring huge amounts of data centers, huge amounts of copper, both for the processing side of the formula, but also the requirement for huge power generation capacity to run those centers.
And yet the copper supply is nowhere to be found to meet a lot of this projected demand. We've seen a ton of issues hit the copper mining sector recently, including flooding at Ivanhoe Mines, accidents at Codelco and Freeport McMoran, protests at Hud Bay. And this is all on top, of course, of the Cobre Panama mine, a massive source of copper, which is still offline at present. With all of this in mind, where is the needed copper going to come from?
Therein lies the same question that I brought up for gold. It's the significant duration of the bear space, and no exploration was being done. Gold is always fairly traditionally active, even through positive and negative cycles. But copper's fell off the cliff. There's a big emphasis in the past 15 years on the critical mineral area. Fortunately, copper is considered a critical mineral, certainly from our view and our activity in Quebec. But that shortfall is going to be hard to replace. With the Grasberg offline and unlikely to be back in production to 2027 at the earliest. So I think that there's going to be significant shortfalls, and that's going to be reflected in a higher price.
Totally agree with you there. Let's shift to discussing Original Metals and how the company fits into the picture. Could you start by giving us an overview?
Just Original Metals is an amalgamation of a copper gold asset that was in one of the ore group's companies, rolled it into Kintavar, which was illiquid. They had a significant property exploration portfolio in Quebec, but they were stuck in the mud. The idea being here for a reasonable transaction, we were able to roll the Roger, which is really the source of our excitement and development these days, indicative of our rebrand, rename, and start life in a different exploration direction.
And could you shed some light on the team behind Original Metals, maybe starting with yourself and your history with the Roger project, how that gives you an edge when being at the helm of the company?
Like I say, I've been in this business for a long time. I started my career in the mid 80s, and Roger was my primary project in 1985. Ran through it for about 3 years, really formulated the first mineralization model at the time with the information that I had. Went off, worked in the critical mineral space, ran Quest Rare Minerals, made the Strange Lake heavy rare earth element discovery in northeastern Quebec. Moved off of that, took a property with me, got it into what is now Scandium Canada, and then that's again a rare earth and scandium project northeastern Quebec. certainly Quest was a significant success. So in coming back, I just happened to meet Stephen Stewart, who's the principal of the Euro Group, for an interview. I thought that when I at the PDAC conference that past March, I found that the attitudes of the junior space was really changing to the positive for the first time in a long time. So I said, I might give it. I basically, after Imperial, I left Imperial and I got a whole brand new operating group team to bring it into production. I was in semi-retirement for about a year and a half, doing some consulting, helping friends with financings and new shells, new property, new companies. I met Stephen, just open-minded. I thought that it's a very diverse group. They had some good operators, had some great projects, and geographically very diverse. And it just so happens that he knew of the Roger, rolling into the Roger project into Kintavar and the nature of the transaction. So I was a Johnny on the spot. And looking at the data, I started seeing some things that were highly unusual. It was modeled as a porphyry copper gold system. But porphyry copper golds, particularly the adjacent lithology, it's an ultramafic intrusion, shouldn't contain zinc. And there were some significant zinc intersections that the previous operator had found. And I think they overlooked the potential of volcanic massive sulfides. And the more work I did, the more evidence I collected, geochemistry, relogging core, doing some age dating on the rocks. And then the recent release that we put out, Downhole Geophysics and the existing drill holes, basically confirmed the model that, you know what, a massive sulfide can certainly exist on the property, and that's going to be our exploration thesis going forward.
Well, I'd like to dive deeper into the Roger project. You mentioned there the company put out a press release this morning discussing results from the recent downhole geophysical survey designed to test your new VMS interpretation at the project. Walk us through that, as well as the progress you've made at the Roger project so far, infrastructure in place, plans for the future, and any other important details.
It all started out when I started relooking at the existing core. They were getting significant base metal intersections in what I ended up logging as being a favorable horizon or a time horizon for the building of a massive sulfide. I was getting 3.2% copper, 3.6% zinc. But more importantly, I think the levels of silver and gold were really high. And at 125 grams per ton silver and 27 grams per ton gold. And it over reasonable widths, about 1.5 meters up to 5 meters. And I traced this thing along for about 1.4 kilometers in straight. And once we put it in the 3D space, it all aligned beautifully. And that's what you expect. If you've got a favorable time horizon, you would hope that it would be aligned, and it certainly aligns over that 1.4 kilometers. So, because quite a bit of drilling was done on the property, and all of the colors are still in the holes, and the holes were spudded, I was able to regain access to some of the deeper drilling with the downhole geophysical program, potentially looking for an off-hole geophysical conductor, from the view that there was no surface electromagnetic signatures, meaning that if there's a VMS, it's at least 400 meters vertically. And the deepest drilling that they did was about 325 meters vertical. So we probed the holes. We got the results back, which we published this morning. We've got some significant conductivity in the areas that we also had base metal intersections at a higher level. So I think it really confirmed our model. We're pretty excited going forward and drilling this thing and seeing what we're through, the next steps.
That's great. I'm going to put a link in the description below to that press release for people who want to dive deeper on those results. Could you maybe speak a little bit to the infrastructure you have in place on the project right now?
There's roads, forestry roads and access roads north of Chibougamau, within 5 kilometers of the town site. It's very level terrain. There's good access to the property. Obviously, an available workforce. I mean, a lot of the mines in the Chibougamau area were copper gold. They've basically shut down now, but that staff is available. The government, the local government, the provincial government is extremely supportive of any opportunity for economic development in an area that hasn't seen it for quite a number of years. So we've got a lot of support. Our sister company, 29 Copper, is in Chapé, which is about 25 kilometers away from Chibougamau. We have a full setup there. We've got a logging area. We've got a core storage facility. We're looking jointly to expand our footprint, getting some office space, and certainly, get a server on there. And then I also, in parallel, XXIX, which is 29 Copper, just made advanced their PEA. And they're surging forward, I think, to reestablish and reopen some of the old, the Opamiska copper gold operation there. That's going forward. And then there's a number of projects south of us, which is Northern Superior, and obviously IAM Gold is quite active south of Chibougamau with their Nelligan property, and that's about an 8 million ounce gold resource. There's just a lot of activity, and you're seeing things picking up in an area that's been starved of any news in the resource space.
Well, let's talk about the company's cash position. How much cash is on the balance sheet at present? How much runway does it give you? And when it comes time to raise more capital, what's the strategy there?
Currently, we have approximately $3.5 million Canadian in the bank, which came with the transaction. It's hard dollars, and as you know, hard dollars are always really hard to raise in the equity markets. There is flow through, certainly charitable flow through, which gives a very good premium to your share price that we're actually investigating. And we have lots of people. I don't know. Do you know that scheme where you get a premium because not only are you getting the advantage of flow through share activity or acquisition, you're also getting a premium because the flow through shareholders can actually roll that into a charitable organization and get an additional write off. So it's less dilutive. I think I don't want to touch my hard dollars if I don't have to. And I mean, we have plans for diamond drilling to follow up on the geophysics. And my preference is to seek flow through financing to pay for that activity.
Great. Well, let's talk briefly about Ore Group's 40% ownership of Original and how you're able to leverage their expertise, their resources to move your project forward.
Like I said, the head of the group is Stephen Stewart. He's got a track record. He's right now we're about 8 companies within the Ore Group itself. We're into porphyry copper in BC. We've got our projects in Quebec, and we've got gold in Ivory Coast, in Awali. I've got what I really like is I've got a full back end. In the past, when I ran companies, I was the head cook and bottle washer. They don't mind the term. I had to do everything. And it's nice having that back end. So we've got financial support, we've got legal support, we've got regulatory support. We've got a technical team that can cross pollinate with all the various companies. In particular, the person I deal with most and is Charles Beaudry. He's a geologist with lots of experience. He cut his teeth in Matagami. In the Matagami camp, and was responsible for a number of massive sulfide discoveries in that camp. And he's certainly he's got a sounding board as any with the model that I've been developing, and he's been very, very supportive all the way through.
I also think it's worth touching on IAM Gold's buying spree in the region, recently announcing a $375 million acquisition of Northern Superior, a $1 billion acquisition of Orbec Gold. What are your thoughts there? Do you think Original could be an attractive acquisition target for either IAM Gold or another larger company moving forward?
IAM Gold, certainly their focus is gold, and Roger just kind of fits outside of. We'll have to see. I mean, ultimately, the Roger project, if indeed we're modeling it to be very analogous to Agnico Eagle's LaRonde base metal deposit, which is it's a large deposit, about 59 million tons all told. That's also an 8 million ton gold resource. So it's a gold rich massive sulfide, very high value, very, very, very diverse commodity, multi commodity. So it basically insulates you from all sorts of machinations of the commodity markets. We currently have a 75-25 joint venture with IAMGOLD on our Anik property, which sits right on the northern boundary of IAMGOLD's Nelligan project, which itself has about 8 million ounces. There's a lot of gold in that area, and I think IAMGOLD saw the virtue of consolidating a camp scale property opportunity to be able to develop that and kind of take a spoke and hub type approach, because a lot of those deposits are quite small. But if you have a central mill, then it becomes, and within about a 20 kilometer or 30 kilometer radius, it becomes economic to go after those smaller deposits, because it's being you're basically diversified or splitting the costs of building a mill in that area.
Yeah, some interesting thoughts there. I have to correct myself. It was an $18 million acquisition of Orbec Gold by IAMGOLD, not $1 billion. I misread that.
Yeah, $1 billion would have been great for them, I'm sure.
Yeah. Well, Peter, this has been a great conversation, but I want to end by opening the floor to you. Is there anything we haven't yet discussed, or anything you think it's important to emphasize that you think potential shareholders of Original Metals should be focused on?
Yeah, I think, I've seen companies that have suffered through liquidity. They kind of, no disrespect, but I think Kintavar lost their way. They had their project portfolio. They had a fishing camp that they were using as a revenue source to mitigate their obligation to go seek, risk capital. They had full-time people looking at their projects, but they also contracted them out to other operators to undertake work for another revenue stream. And then their property portfolio was so diverse that people started asking, well, are they a gold company? Are they a copper company? Are they into nickel? Are they into lithium? They had a full diverse, but at least from our perspective, we've got those properties. They have intrinsic value, whether or not we'll work them, or certainly they might have value to other operators that might be interested. And I personally would like to see those properties worked through option or sales. So that's one area. I'm really excited about Roger. I think if we make good on our views, that I think that there's a massive sulfide there. It opens up an area in the Chibougamau camp that's been completely overlooked for that kind of deposit. And I think part of the reason is, it was also always model driven. A lot of the gold mines in the Chibougamau camp are considered porphyry type deposits. So it was applied at Roger, and an alternative model, if successful, would open up, I would consider to be a regional scale opportunity for the further discovery of these deposit types.
Fantastic. Well, I'm going to put a link in the description below to the Original Metals website, along with social media, as well as that latest press release, as I mentioned earlier. Peter, thank you so much for coming on the show. It's been a blast.
Take care. Nice talking to you.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.